A good late afternoon and thanks for joining us. I'm Sage and you're watching 𝐊𝐿𝐴𝐿 TV live from Sydney. This is the last show of the day, the last trade, and there's no better way to wind down the day than with today's market close commentary, so let's dive straight in. The Australian share market ended lower for the second straight session on Thursday, albeit reversing half of the early losses amid sustained selling across materials, consumer staples and healthcare space. The market staged a smart recovery in the last few hours of the day's trade as investors cheered the robust trade balance and housing finance data. The macro data follows the better-than-expected GDP figure released on Wednesday, and the ASX 200 closed 0.55% lower. During the day's trade, the index declined as much as 1.2% to hit a low. The equity market revered most of the day's losses after data showed that the country's trade surplus hit a fresh record high. 12.1 billion Australian dollars in July, up from the previous record of 11.1 billion Australian dollars in June. And as per the data published by the Australian Bureau of Statistics, exports rose by 5% to 46 billion Australian dollars as compared to the previous month, while imports climbed 3% to reach 33.9 billion Australian dollars. Investors also gave the thumbs up to home refinancing data, which also hit an all-time high in July. The data released by the Australian Bureau of Statistics showed that home loan refinancing commitments between lenders hit a record 17.2 billion Australian dollars in July, up 6% compared to the prior month. This was driven by record low interest rates, which encouraged owners to reduce their mortgage payments. And the market breadth indicating the overall strength of the market was negative as 6 of 11 sectors ended in the red zone. The materials sector emerged as the worst performer with a 2.5% loss, followed by consumer staples, which fell 1.2%. Among others, healthcare and utilities also witnessed a surge in selling activities. And meanwhile, energy sector emerged as the biggest gainer for the second day. It was followed by the tech, industrials and AREIT, which closed in the positive terrain. Materials sector emerged as the top laggard due to a fall in the iron ore prices due to the steel production ban in China. The sector heavyweights BHP Group, Rio Tinto and Fortescue Metals ended lower. On this note, let's shift our lens to the top gainers and losers of the day. The top gainer on the benchmark index was the computer software developer Altium, which rose 4.3%. And some of the other top performers were pharma major Clinuvel Pharmaceuticals, healthcare group PolyNovo, tech firm NextDC and technical service provider ALS. On the losing side, the blue chip miner BHP topped the chart by falling 6.9%, followed by the malt supplier United Malt Group, which dropped 6.2%. And moving our focus now onto the shares that hogged the limelight today. First up, the shares of the biotechnology company Mesoblast rose nearly 2%, snapping the two-session losing streak post-releasing its annual earnings report. The company has reported net losses of $98.8 million in the financial year 21, while sales revenue dropped by 77% year-on-year to $7.5 million. Also making the news, the share price of blue chip miner BHP Group dropped over 7% in the intraday trade as stocks traded ex-dividend today. The world's biggest miner had shared on the 17th of August that it will be paying a final dividend of $2.71 or $2.71 Australian per share. And this is around $10.1 billion in total. And the next big newsmaker is Woolworths stores are in low spirits as the CEO Brad Banducci confirms more than 3,300 staff are in COVID isolation. The highly exposed supermarket's workforce is hit by the Delta Blues. Very directly, the stock dropped as it traded ex-dividend today. Next up is the engineering services firm TEK Tech Ocean Group. Made a weak debut on the Australian Securities Exchange on Thursday after receiving an overwhelming response for its initial public offering. The stock declined as much as 6% in the opening deals to hit a low of 47 cents against the offer price of 50 cents apiece. Post the listing, the stock was trading 2% lower, while 1.4 million shares worth 692,500 Australian dollars changed hands over the counter. The company commenced trading today under the code T3K after successfully raising 6.6 million Australian dollars via its IPO. Founded in 2007 in Gippsland, Victoria, the company intends to use IPO proceeds to expand its existing and new business, as well as to meet the capital investment needs. And before we look at more of the trending stocks, let's now take a small break.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐊𝐴𝐚𝐥𝐤𝐢𝐧𝐞 TV.
Sage here, welcome back to the last trade by 𝐊𝐴𝐚𝐥 TV. And shares of the travel retail outlet Flight Centre Travel Group rose 2.4% in the intraday trade following signing of a corporate travel joint venture in Japan. The company, in an exchange filing, said it has formed a joint venture with Tokyo-based NSF Engagement Corporation to launch its leading FCM travel management business in Japan, the world's fourth largest corporate travel market. The move is part of the company's strategic expansion plan within the Asian corporate travel sector. And FCM Japan will be operational from January 2022 and headed by the General Manager, Kenichi Shiraishi, currently the leader of NSF Engagement's corporate travel business. And also making the news, shares of Cenex Energy slipped nearly 2% despite a positive development. The company has signed a gas sales agreement with the Australian packaging and paper manufacturer Opal. The agreement is valid for up to 6 years and up to 12 petajoules of natural gas. And as per the deal, Cenex will deliver natural gas to support the Opal Paper and Recycling Division's manufacturing operations at Botany in Sydney's New South Wales. And since 2019, Cenex has inked nearly 70 petajoules of natural gas sales agreements with a range of companies. The list includes CSR Building Products, Aurora, Nearstar, Southern Oil Refining, Visiglass, CleanCo Queensland, Alinta Energy, Adbury and now Opal. And let's move on to the next. Shares of West-Wits Mining plunged as much as 12% following a business update. And the gold miner said that its Kala Shallows project, located on the Kimberley Reef package in the Witwatersrand Basin in South Africa, delivered positive results supporting its progress to stage 1 of mine development. As per the company, the definitive feasibility study carried out by the company supports an underground mining operation with a robust rate of return over a 17-year life of mine. The completion of the DFS is a key achievement in West-Wits' journey of transforming from an exploration operation to a robust mid-tier gold production company, says Jan van Heerden, the managing director of West-Wits. And up next is the explorer and gold producer Matsa Resources, whose shares surged 7% after the miner issued a mineral resource estimate update for its Fortitude Stage 2 mine. The company boosted its gold resource to near 1 million ounces at its Lake Carey gold project following an upgrade of the Fortitude Stage 2. The miner said that it is evaluating the impact on existing Stage 2 mine plans, which has the potential to make a substantially positive mining and economic impact. And meanwhile, the shares of Australia-based oil and gas explorer company Armor Energy rose 3% following an ASX update. The company has appointed Jeff Schrull as the Chief Executive Officer-elect for the proposed demerger and separate ASX listing, MacArthur Oil and Gas Limited. And last but not least on our list today, ASX-listed multi-commodity explorer Accelerate Resources on Thursday announced that it has executed a building contract to vend its interest in the Tambalup Cowlan project for a 33.3% interest in Vitus Resources. And Vitus Resources is a Perth-based silica resource and technology development company. Before we take a look at more trending stocks, let's take a small break.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐶 TV.
Sage here. Welcome back to The Last Trade by 𝐊𝐶 TV. And now in our last segment, a look east towards the Asian market performance. Shares in Asia Pacific region were trading on a mixed note on Thursday, undermining firm cues from Wall Street as concerns about the potential slow growth dampened the market sentiment. The Manufacturing Purchasing Managers Index grew at a slower pace in China, Japan, South Korea and Taiwan, indicating that the coronavirus pandemic-led restrictions extended beyond just consumption. And South Korea's KOSPI was the worst performer in the region with 1% loss, followed by Taiwan's weighted index, which fell 0.6%. The Straits Times index in Singapore traded lower by 0.3%, while Indonesia's Jakarta composite dropped 0.25%. And meanwhile, Japan's Nikkei gained 0.25% and Hong Kong's Hang Seng traded higher by 0.1%. Thailand's SET composite climbed 0.3%, while India's BSE Sensex rose 0.2% in the opening trade. In a similar trend, the mainland Chinese stocks were trading higher, with the Shanghai composite gaining 0.55%. And moving on to the US now, Wall Street closed mostly higher in the overnight trade as investors cheered the weaker than expected private payrolls data, which strengthened the case for the dovish monetary policy. And the renewed buying of technology stocks such as Apple, Microsoft, Google, Amazon and Netflix also supported the market. The Dow Jones dropped 0.14%, while the S&P 500 ended marginally higher by 0.03%. The tech-savvy Nasdaq composite gained 0.33%. And now we've reached the last segment of this show. Let's have a quick look over the crypto market's performance. The major cryptocurrencies were in an upbeat mood today as investors' sentiment were boosted by positive news and optimism about the growing demand from institutional investors. In a major boost to digital assets, El Salvador has approved acceptance of Bitcoin as legal tender. The Legislative Assembly of the Central American country voted in favour of the adoption of the Bitcoin as official currency, which will be officially declared on September 7th. And with this, El Salvador has become the world's first country to recognise Bitcoin as an official currency, adding optimism to the market. Changpeng CZhao, the CEO of one of the world's largest exchanges, Binance, says its US affiliate is eyeing an initial public offering within 3 years. And the price of Bitcoin, the world's largest cryptocurrency by market capitalisation, rose 5%. And Bitcoin prices are up 71% this year, though far away from its record, just below $65,000 in April. Meanwhile, Ether, the world's second largest crypto, jumped 20% in the past 24 hours. And in a similar fashion, Cardano, the third largest cryptocurrency by market capitalisation, rallied 15%, while Dogecoin prices gained 10%. And among others, XRP, Stellar, Uniswap and Litecoin also witnessed the strong buying momentum. Well, it's a wrap for now. I'll see you tomorrow on 𝐊𝐶 TV at 9:30 a.m. live from Sydney. Stay safe and have a good evening. Sage signing off.